What's up, everybody? Tuesday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. I hope everybody had a great Monday. Got your trading week off right as we had another big day up in the equity markets. We're coming down a little bit in the overnight session. Well, I say down a little bit. We're down about 25 points in the S&P. So taking a little bit of a pullback. Do me a favor, if you're new to the channel, click the notification bell, hit the subscribe button, become a regular viewer of our daily market commentary. What we do here is we look at the same markets every day, identifying potential breakouts and reversal trades from an educational perspective, giving you an opportunity to understand where the markets just might go today. So if you're new to the channel, make sure you subscribe. If you're a regular returning visitor, do me a favor, comment down below. Question of the day: what is your favorite market to trade? And why? What's your favorite market to trade and why? Do you do equities? Do you do bonds? Do you do currencies? What is your favorite one to trade and why? My personally favorite market is crude oil and the Nasdaq. Those are my two favorite markets to take a look at every day. I think those are the ones that give me the most dynamic trades, although lately crude oil has not been as good. So comment down below. I'd love to hear your answers. All right. S&P this morning, we're down 25. Now, zooming in on here a little bit, we had a breakout yesterday above this 3155. This actually occurred during our live trade room on Sunday night. We stayed above there pretty much the whole day and then used that line as support and continued to bounce off it. Now, in the overnight, we did come down below that level, and we're coming to a little 15-minute zone. Now, this little 15-minute zone, let me zoom in on it here real quick. This 15-minute zone is really the start of Sunday night's session, so it's not a super strong level. We were actually looking at this on Sunday night. I wouldn't say that this is a phenomenal level. When I look at the hourly chart, I think you're probably better off waiting for the gap fill if you want to go with something a bit bigger. So it's still there. It's still a valid trade and a valid entry. So I'm going to leave it on the chart because it's so small. Your stop would go, at the tightest below this 3127. It's a very small little level because you've got, those areas there where we could see a bit of a reversal. Now, if we rally back up on the hourly chart and you want to try a short, you do have this area here from the overnight session, and as well as this higher wick right up in through here. But I don't know if it makes sense to do a whole lot of shorting in this market condition, as we have shown that our 4-hour trend definitely nice and up, big moves to the upside. And so, we got stopped out of a couple of shorts back here a couple of days ago, and we've been long ever since. And that's really the moral of the story, is to stay long until the market tells me not to. And so I'm not going to look to a short on any of these markets today in the S&P. Moving over to the Nasdaq here in the NQ. When I look at the NQ, we have price coming down a little bit more, than the S&P. A little bit less than the S&P off of its high. We are above what is a quality area of demand right in here. Now, this I think is a cleaner area. This corresponds with the 15-minute level that we have in the S&P, but it shows up as an hourly level on the Nasdaq, which is a little bit better. Now, we're much closer to the S&P's level. Put that on the hourly chart. We're much closer to the S&P level than we are to the Nasdaq level. It's much further away, and so I think that we could get price coming down here in the Nasdaq. If you wanted to try some sort of a little intraday opportunity in here, you could give that a shot. I think it's a very, very tight stop, though, just above here, because there's a good chance we could just pop right back above there. Looking at the Russell. So yesterday in the Russell, we had a nice little move off of our 15-minute level. So hopefully, those of you that were able to catch this, we wound up getting about a 4-to-1, 5-to-1 move off of that level. The second time in, we kind of based a little bit and then broke down and then used that old area of demand as supply right here. So this actually was a great little 15-minute trade. And that 15-minute level, by the way, that we bounced off of yesterday was formed at 6 p.m. on Sunday night, which is the same time that our S&P level was formed on Sunday night. And so that level was good for about a 5-to-1 reward to risk trade off of this. And so now we've come back into the hourly little wick over wick area here below the gap fill. Let's see if that gives us a little bit of a move. Now, I will say we've already traded all the way to the bottom of this, and we have some supply up in here. So I don't have a tremendous amount of hope for this level. If you took this long, I would, you're already 2 candles in to the 6 candle rule. The first candle didn't give us much movement. The second one actually traded to the bottom of our zone. So I now need to remove this zone since we traded to the bottom. If you're still in it, allow it to run a little bit, but move your stop to break even once you've gone a 2-to-1 reward to risk. Looking at the 15-minute level, I think there's a chance we could reverse up here somewhere around this zone. This isn't a very clean level on a 15-minute chart. Not the cleanest of areas, but look for basing inside of where we are now for a potential breakdown. And I think that might be a decent opportunity in this one. If you're going to go short, I think this is the market to go short on, as we've seen on our 4-hour chart here has the slowing of momentum. This would be actually where we would look to get short below here on the 4-hour. Moving over to our commodity markets, crude oil and gold. So taking a look at crude oil. We had spoken the other day about if you were interested in maybe a bull call spread on this thing. You got a pretty nice little run yesterday on that move up, but now it's just kind of chopping along sideways without a whole lot of price movement. We actually looked at an iron condor in this thing the other day, and didn't really see a whole lot from a credit perspective. So I don't want to add anything to my charts today. I don't want to force a trade when a trade's not there, and I feel like that's what I would be doing. I could look to a short up in this region, and we could even look to a potential breakdown below here if we get basing there right at that $40 price point. Gold, we are in between. For those of you that took our Iron Condor session, leave me a comment below. Let me know if you took the Iron Condor trade in our gold position. Our gold level is working out very, very well, staying between our zones and still kind of just hovering in there. We still have demand down below here. Remember, this was the demand that we came within 2 ticks of entry before a very strong move away. So the level's still valid, and then a really nice supply area up above us. I will also take a look. If I go to the 15 on this one, we have a cleaner little entry right up in here. I'm actually going to go right to the London Open session as our reversal time of the day. All right, and then let's go to our bonds and currency markets. So the first one being the ZN. Now, in this ZN trade we looked at yesterday, we got our entrance right here. 1, 2, 3, 4, 5, 6 candles later. The market was exactly where we had gotten in. I mean, it came back to basically break even. And so at 6 candles, this told us it's not going to work. Get out of the trade. And it still is just kind of hovering around there. So not a whole lot has happened. So what am I looking at now? Nothing. And the reason I'm looking at nothing is because my 4-hour chart's telling me there's just not a whole lot happening, so don't force a trade in this position. Next, the Aussie. So in our Aussie position, we did have a 15-minute level set up inside the Aussie. Our little breakout area in here, we didn't truly get the quality basing that we had spoken about before we got this poke above on our Sunday night. We then poked above it Monday morning without basing. And so, no big shocker that this one was just not going to be a level that was worth holding on to. We then come to, because, it gave us 2 areas of popping above without basing. And then we came to our Sunday night level. Now, our Sunday night level was a 15-minute trade. 1, 2, 3, 4, 5, 6 candles later, it had gone nowhere if you were there in the overnight. If you didn't take this in the overnight because you're not an overnight setup, then obviously no big deal. I do think, though, that we may see a reversal as of right now. So I think right now we're setting up for a candle-to-candle short opportunity. And so candle-to-candle short would be once this candle prints, and right now it's 5:50 a.m. Central. So if this candle prints, my entry would be right there at that 69.29, and my stop would be just above 69.41. It's candle-to-candle style. And so by being a candle-to-candle style setup, what you're looking at is a small amount of risk with your target being right about here. So this would be our target for this particular position. All right. Next, our euro trade. So in our euro position, we came super close, switched this to a confirmation entry, and then price popped right through it. So no entry on this trade. This is why we switch to confirmation entries when we almost get filled, and then combine that with the basing we had just before the level. Definitely weaken that probability. However, that exact zone, let me put it back on the chart, I think now sets up for a really nice reversal trade up here if we retest that level. So I'm going to leave that in there for a potential reversal. We do have a couple of nice wick over wick areas in here, and we're actually coming up to one right now from the European market open. So if you don't feel like we're going to make it up to this region, I'd be okay with this as well if you try to candle short with your target right down here before this area of demand. Canadian dollar. So our Canadian dollar level, we touched our zone, got a decent little move away from our Sunday night session. And if you had taken your stop and moved it to break even after you saw that it didn't do much, then you're still in the position and it's moving your way nicely. So this one, I'm going to remove this level since we got a nice little trade off of that zone. Hopefully we're able to catch that for some points. And now we've got a little wick over wick area here just above us that we may or may not make it into. So let's keep that area in line for today. Great British Pound. So in the Great British Pound, we are still above our sideways little potential breakout area that we talked about yesterday, and it's just chopped around sideways, so nothing to add in the pound from yesterday's daily market commentary. And then the Japanese yen, we did a touch and go off of our level. We had talked about a potential breakout above here, but we knew that we had this supply area up in here. So this supply area allowed price to give us a touch and go off of this level. It happened actually right at the Japanese market open, which makes it a little bit more probable of a zone, but it's also a speed candle up there, and speed candles we anticipate getting retraced. So let's look up here for a potential reversal. That's all I got for today. Remember, tomorrow is a live daily market commentary, so don't forget to join us live tomorrow morning, 7 a.m. Central, as we will do our DMC in a live version. Looking forward to having you there. If you have any questions, as always, shoot us an email, support@tradersarmy.com. Thank you so much for joining us today. I look forward to talking to you soon. See you.